Here are the crypto top headlines covered in this video. Uphold pours $5 billion into Ripple's cross-border payment solution. Next, $11 trillion investment group backed by UK government publishes plan for fund tokenization. Also, GBTC discount shrinks to two-year low of 7.5%. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline: Uphold pours $5 billion into Ripple's cross-border payment solution. Uphold and Ripple joined forces to transform cross-border transactions leveraging expertise in Web3 technology for global financial innovation. Uphold, a leading Web3 financial platform, has announced a partnership with Ripple, a prominent blockchain and crypto solutions provider. This collaboration aims to revolutionize cross-border payments by leveraging Uphold's liquidity, expertise, and Ripple's innovative blockchain technology. Uphold joins Ripple to power cross-border transactions. Under this partnership, Uphold will serve as a key node in Ripple's liquidity network, facilitating the conversion of XRP, Ripple's native cryptocurrency, into fiat currencies for bank payouts. This integration will enable companies using Ripple's services to seamlessly settle cross-border transactions with enhanced speed, efficiency, and cost-effectiveness. Simon McLaughlin, CEO of Uphold, emphasized the significance of this partnership, stating, "Ripple provides a tremendously valuable service to businesses making cross-border payments, and we are thrilled to be an essential part of it, such that the Uphold platform in this capacity connects its features to a fully automated high-frequency trading stack connected to 30 underlying trading venues, allowing us to offer deep liquidity, multiple execution paths for transactions, and exceptionally tight spreads." The partnership initially focuses on 4 key corridors: UK-Europe, Europe-UK, UK-US, and Europe-US. Then again, Uphold plans to expand its services to Brazil in the near future in hopes of further broadening the reach of this innovative solution. New partnership paves way for seamless finances. McLaughlin acknowledged the limitations of existing cross-border payment systems, highlighting their high costs, slow processing times, and potential for errors. He expressed optimism that this partnership will address these challenges and pave the way for a more seamless global financial ecosystem. Uphold is committed to providing an initial liquidity volume of around $5 billion annually, demonstrating its confidence in the potential of this partnership. The company remains steadfast in its mission to harness the power of Web3 technologies to revolutionize traditional financial services. On the flip side, Ripple's XRP has faced legal challenges regarding its classification as a security by regulatory bodies in the United States. The actual demand for XRP-based cross-border transactions may face hurdles due to regulatory uncertainties and varying adoption rates among financial institutions. Why this matters: the partnership between Uphold and Ripple signals a new era of cross-border payments, one that is characterized by speed, efficiency, and cost-effectiveness. By leveraging Uphold's liquidity expertise and Ripple's blockchain technology, this collaboration has the potential to transform the global financial landscape. Our next top headline: $11 trillion investor group backed by UK government publishes plan for fund tokenization. Investors representing trillions of dollars in assets have published a new roadmap for fund tokenization approved by the government of the UK. In a new report, the Investment Association, a working group with over $11 trillion with assets under its management, lays out its plan to implement tokenized funds or funds with digitized shares that trade on blockchains. Tokenized funds issue tokenized shares or units to represent the investor's interest in them and are generally traded and recorded on a distributed ledger rather than a traditional system of records. Ultimately, tokenized funds are intended to provide a way to interact with increasingly digitized capital markets, where both traditional and potentially new forms of asset class are issued and traded using DLT, or distributed ledger technology. According to the Investment Association, fund tokenization is distinctly separate from other digital assets, such as crypto tokens and non-fungible tokens or NFTs. While some of these developments are still in flight, and tokenization in other areas, such as equities and other investable assets, is dependent on further work, it is now the ideal time for the funds industry and the UK authorities to take advantage of the opportunity to establish the fund tokenization infrastructure for the UK funds market. The discussion of DLT and tokenization is sometimes confused or conflated with cryptocurrencies and non-fungible tokens, or NFTs, given their origin in the digital asset technology itself. An investigation into the utilization of cryptocurrencies, NFTs, and other unbacked crypto assets within investment portfolios is out of the scope of this report. With a few exceptions, the investment management sector has taken a cautious approach to the adoption of unbacked crypto assets as an investment class, given a perception of risk and volatility and several well-publicized recent incidents that have questioned the integrity of the broader market. Tokenization at the fund level simply seeks to leverage the benefits of the underlying technology and does not automatically provide such an exposure unless the fund itself invests in unbacked crypto assets. Utilizing the technology and the concept of tokenization is therefore distinct from becoming exposed to unbacked crypto assets. In a statement, Sarah Pritchard, the executive director of the UK's Financial Conduct Authority, or FCA, says that the government is welcoming of the report. We welcome this report on fund tokenization from the Technology Working Group under the Asset Management Task Force, which the FCA is an observer of and has supported, and which forms the first stage of a pioneering work stream to identify and articulate the benefits of innovation in technology for investors and the wider asset management industry. Our next top headline, GBTC discount shrinks to two-year low of 7.5%. GBTC shares are approaching BTC parity as negotiations between Grayscale and the SEC move apace. Shares for the Grayscale Bitcoin Trust, or GBTC, the world's largest Bitcoin fund, are nearly back to parity with Bitcoin, or BTC's, price after trading deeply underwater for the past 2 years. Their rising value reflects market confidence that Grayscale's efforts to convert its fund into a Bitcoin spot ETF will prove successful. The SEC's promising meetings. Starting on Wednesday night, GBTC's discount to NAV ratio shrank as low as 8.6% according to Bloomberg ETF analyst Eric Balchanas. The discount reflects the difference between the market cap of GBTC's shares versus the total value of all BTC held by the trust. According to the most recent figures from Grayscale's website, the fund holds $33.75 in BTC per share, compared to a market price of $31.21 right now, a mere 7.5% discount as of Friday. The reduction was likely prompted by their updated filings/SEC meeting on Wednesday, the analyst said. At the time, separate memos from the Securities and Exchange Commission showed that executives from Grayscale, BlackRock, and others held meetings with the SEC's Division of Trading and markets on Monday to discuss their respective ETF applications. The meetings appeared to concern how fund managers would redeem shares of their trusts for underlying BTC whenever the shares began trading at a premium or discount to NAV. While firms like BlackRock are pushing for an in-kind redemption model, the SEC wants an in-cash model that doesn't require issuers to directly touch BTC. Major investors like Cathie Wood and Mike Novogratz, who themselves govern funds sponsoring separate ETF applications, have noted increased engagement from the SEC in helping to sharpen their products before they reach the market. Rising confidence in GBTC. The trend has increased investor confidence that the agency might finally be willing to approve an ETF, inviting investors to buy both GBTC and BTC. Not only is an ETF expected to invite major institutional flows into BTC, but it will also immediately restore the value of GBTC shares to that of the BTC they represent. That's a mouth-watering prospect for early GBTC investors who will be exposed to the upside of both assets if they invest in the fund prior to its conversion. Back in December 2022, GBTC shares traded at a whopping 48% discount from their underlying BTC at just $8 per share. Bloomberg analysts like Balchanas believe a Bitcoin spot ETF is 90% likely to be approved by January 10th. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.